come down, starts to come down, it's coming down, right? And then you have like a small body or whatever, right? So basically what had happened here is that price was in a supposedly uptrend, right? Price created a high right over here. Price created high. And now what you're looking at, you're like, okay, you know what? Price has made a high. The trend is up. There's a lot of volume in the market, right? So this is what's going to happen. When you come to the charts, you will see price making a high. You will see there's going to be a lot of volume. And then there's going to be a little pullback, right? There's going to be a pullback. And then there's going to be a little bit of consolidation time. Because you have to understand, price just cannot keep moving in volume, right? If price is going to move, it's going to pull back. There's going to be some sort of consolidation. Consolidation means that, okay, price is taking a rest. Price is taking a breather right now to continue going up. So now, once we are in an uptrend and a support is formed, how do you identify support, right? How? How is support identified? A support is identified, a support is a level which price cannot break to continue down. That's a support. Right, so let's say this is the 30. So for simplicity's sake, we're only going to focus on the 30-minute time frame, right? So let's say this is the 30-minute time frame, and the next candle you get after this bearish candle is something like this. You get a bullish candle right over here. So when you get the bullish candle, now you can say, okay, hey, you know what? Maybe price has made a support now, right? Because you had price made a high, you had a bearish candle, bearish candle, bearish candle, and now you have a bullish candle forming right over here. So if a bullish candle is forming right over here, and what we've learned is that price, there's going to be an 80% chance that price will retest the high, where will be our stop loss, right? Where's going to be a stop? So once the support is formed, obviously, you know, like, okay, the stop loss is placed below support, but when price is trending up, what does price make? Price makes a high, and price makes a low, right? Then price makes a higher high, then it makes a higher low, then it makes a higher high, and then it makes a higher low, and it continues on, right? That's what price does. So when you start to look at it from a candle perspective, oh, by the way, this webinar is brought to you by Prime XBT. Prime XBT is a platform we're going to show you guys later on. So, right, so price makes a high like this. So when you have a candle forming, what's going to happen? When the candles are forming, basically what you're going to do is you're going to be like, okay, like, you know what, if prices now continue to go up, that means the candles should respect the lows of the previous candles, and they should continue making high highs and high lows. That's what's nice. This is the most simplistic way you can look at when there's volume in the market and when price is making a high or when price is making a low, right? Just wait for a support to be formed. A support is formed after a bullish candle closes right after a bearish candle. And you're like, okay, you know what? A support is formed, so now we can continue to go up. Now, how do we know that this candle here will continue up? That's sometimes, you know, I get that question. Well, Raja, you know what? It seems right. You're right. It's going to go up. But like, how do we know it's going to go up? We don't know, right? We don't know whether the candle is going to go up or not. We're just going based on probability. We're just saying that, okay, there's a high probability that the next candle will now continue to go bullish because the previous candle was bullish at support in an uptrend. That's it, right? And if price is going to go bullish, we're expecting the candle to respect the low of the previous candle in an uptrend, which is going to be this low right over here, right? Because if that low is respected, then price is going to continue to make higher highs and higher lows. So now when you're looking about entries, you're first of all looking to see that, okay, if you're trying to take a buy, you're looking to see that, okay, if I take a buy, where will my stop loss be, right? So wouldn't it make sense to have a stop loss below this candle right over here? Because if this candle is going to respect the low of the previous one, it just makes sense to have a stop loss below the previous candle, like to say that, hey, like, you know what, for price to continue up, it has to respect the low of the previous candle, right? And this is a 30-minute time frame. So basically, the higher the time frame you go into, the stronger this probability becomes. Now, when you're looking at the 15-minute time frame, the 15-minute time frame, it might have some sort of like, you know, it might not be as like, you know, as better as the 30-minute, because 30-minute confirmations are much, much better. And the 15-minute confirmations are weaker. So proportionally, when you go to the 1 hour time frame, the 1 hour time the 1 hour confirmations are much better than the 30 minutes. The 4 hour confirmations are much better than the 1 hour, and so on, right? So this is when